this video, I'm going to show you why the $600 billion solar industry is a lot safer of a bet than any other traditional investment vehicle like real estate or stocks. Most investors or people that are just looking to diversify some of their portfolio usually think they have two choices. Either invest in real estate because that's all you know, just low for a slow and steady payout, or worse yet, gamble in the stock market and kind of wait to ride out the volatility. But what if I told you there was actually a safer route where the investment pays for itself in months, not years, and with none of the market swing? That's exactly what I'm going to talk to you about in this video. First, we're going to look at the real estate example. And with real estate, there's a lot of avenues within real estate. There's fix and flip, there's buy and sell, there is renting out properties, there's investing in multifamily, there's so many different avenues. And although it's considered one of the safest possible investments you can buy into, I've seen quite a few people lose because they don't know what they're doing, which is really the punchline. You have to know what you're doing. Now, if you are already in the real estate space and you know what you're doing, then kudos to you. But for the most part, real estate is anywhere between 6 to 12%, give or take. Some of you out there maybe that are doing a better job, maybe you can make a little bit more, but that's not really a life-changing type of cash flow that you'll be looking towards. This is mostly a long-term investment vehicle where you can just park your money and not really expect that much of a cash flow, but essentially just wait to ride out all the real estate cycles and eventually, sell the property to where you can make some money. Now, the next thing is the stock market comparison. The stock market is probably the worst thing you could possibly invest into because there is a huge amount of volatility. I mean, markets are really shifted by people tweeting, by people making posts on X. If you're on the receiving end, that's bad news for you because if you're trying to either short a stock or kind of ride the wave, you don't know what's going to happen. You don't know how that stock is going to end up doing, because if we did, we'll be a lot richer than we actually are. But that's not the case. It's only fun if you're the person making the tweets. But let's look at the typical annual return. Let's say for a typical, not the usual stocks that you can invest into, do research and stuff like that, but the typical safest kind of route that you can go is probably the S&P 500, where you're looking at steady 10% year over year. That's probably the safest bet out there in terms of compounding interest on your investment. But again, the cash flow, you're not really looking for a cash flow. You're just looking to pump money into it and then hope in 20 to 30 years, you're going to have a better tomorrow. I'm not saying you shouldn't invest in stock. All I'm saying is if you're looking for immediate cash flow where that can actually help you either work less or potentially add a massive diversification to your portfolio to where you're actually seeing the fruits of your hard-earned money on a month-to-month basis, the S&P is definitely not it. Now, let's talk about the solar as an example. Primarily the residential market, but we're also getting into commercial as well, which is very, very lucrative. But let's look at the residential market, just isolate it the way it is right now. So first of all, a lot of people are worried about the expiring tax credit. I have other videos where I talk about that specifically, but I am going to mention it one more time again if that's the first video you ever see of me. Essentially, we have a strategy to where that doesn't bother us even one bit because we're still going to be able to help homeowners take advantage of the tax credits, but not the traditional tax credits. Because what we're doing is we have a strategy where we take the residential system and we commercialize it. So we're able to get a lot more things such as depreciation, writing off the interest on the loans, and obviously the traditional ITC, but not on the residential side. So we're also able to do that. But there's so many things involved into this that I can go into. But essentially, that is one of the main strategies. So for a lot of low income families that are looking to go solar, we have a way to help them out even if they don't have any tax liability whatsoever, because a lot of people are pitching the solar deal to homeowners that don't have tax liability as if they're supposedly going to get a check from the IRS. And usually I tell people, when was the last time IRS wrote you a check? IRS is not going to write anybody a check. What they do is if you have any tax liability, you can write off some of the system costs, and next time you're supposed to be paying your taxes, you're just going to pay the IRS less than what you owe them. Now, of course, a lot of the homeowners that are actually interested in going solar, they don't have any tax liability. And so even in the example of the tax credit not going away, which it is due to the one big beautiful bill, they're still not going to be able to save anything. And a lot of homeowners get lied to specifically about about the tax credit situation. Our strategy involves buying out their tax credits, everything, the whole rights to their system. And essentially what it is, they still own the system, but we buy out the rights so that we can then actually assume the tax credits, or rather sell the tax credits, right? So essentially what we're doing is we're buying the rights to use their tax credits on the system, and we commercialize the solar system that way, so that right after install, we can actually, not the fake writing the check, but actually write the homeowner a check for 25%, the entire loan value. Which, I'll give an example. If the solar loan is, for easy math sake, let's say it's $50,000, well, that homeowner is going to receive $12,500 right after install, which is a massive cash injection for a lot of these families, which you can see how they're not only winning and saving a lot of money, but also we're helping them in a major way, which puts us leaps and bounds ahead of any competition in the area. And the other strategy that we have is to where we actually get rid of all the origination fees or dealer fees on solar financing, which if you don't know anything about, don't worry, but essentially those are the origination fees on the loan. Solar industry is very weird in that way, but essentially the solar loan can have a lot of fat to be trimmed off if you put the customer on a low interest rate. But anyway, I have another video talking about that as well, so I'm not going to really go into that, but we have a way where we basically get rid of the dealer fees, and on top of everything, we also able to give them 25% of the entire system cost of the entire loan value, which is insane for a lot of these families. So that's how we win as a company, and our investors win because we're leaps and bounds ahead of anyone else that is trying to pitch that same homeowner. And 75 to 80% of the time, we're actually able to solidify the deal on the first touch, which is a closer goes out to the property, they show value of what they're getting by switching to solar, and then the customer signs the agreement right then and there. Then the system is installed within 10 days, which is when we actually get paid, and the investors of course get paid. But how does the solar really compare to the real estate example or the stocks example? We actually provide you with a life-changing cash flow and a really good cash on cash return historically that we have seen across all of our investors, between 50 to 100% cash on cash returns. So usually the initial investment is paid off within 2 to 4 months, give or take, based on initial startup capital. And on top of that, the way our model works is we are not subject to volatility or market conditions, because I'm not praying and hoping that the advertising gods are going to have mercy on us this month, and so we're going to make our investors happy and we're going to all make money. Because if that was the case, then we would have a month which is good, and then we're probably going to have a month which is not so good and a month that is bad. So we're subject to volatility as ad costs really changes and fluctuates throughout the year, which I'm sure you know, the advertising game on these ad channels like YouTube, Google, Instagram, Meta, you're really looking at an arbitrage for online real estate, because there's only so much space that can be taken, and so everyone is really bidding for that placement, and the person who tends to spend the most money obviously gets it. Essentially, that's how it works. So if we had that model, we'd still be producing pretty good results, but again, like I was saying prior, we'll be subject to volatility in market conditions a lot more than what we're doing right now, which is we're actually only paying per result, which is a credit qualified homeowner. We have appointment providers that are essentially providing us with these appointments for our closers to go and pitch in home, and because the appointment is credit qualified, at that point it's really down to the closer to do their job, which is to close a deal. And we have historical data to show the 1 out of every 2 to maximum 3 appointments is where we actually close a deal. So it's very easy to tell what kind of return we are going to get from all of the marketing dollars that we spend on these appointments. So you as a future investor or someone that's looking to invest into this, would feel very comfortable knowing that, hey, this is just the data and that's what we're seeing, and it doesn't fluctuate. It's pretty linear because we're paying per result, and that's what it is. And the greatest part about this is that it is actually your own business. So you own it. We help you get set up and everything everything else like that, and then we just run it for you. So if you are interested and you have at least 50,000 in liquid funds and you want to diversify your portfolio to where you actually start to see some life-changing returns, click the link below in the description. We'd love to show you how this works in more detail. So you're either going to be talking to myself or one of our team members, but we'd love to show you how everything works. And then if it makes sense, we can actually partner up. I hope this video was of value to you. Thank you so much for watching, and I'll see you in the next one.